Hello and welcome to the latest news update on Canary News. The recent global decline in demand for electric vehicles has led to Tesla's largest quarterly sales disappointment, impacting Elon Musk's influence in China, the world's largest automotive market. Tesla's market share in China dipped to approximately 6.7% for the quarter ending in December, down from 10.5% in the same period the previous year, according to calculations based on data from China's Passenger Car Association. Despite Tesla's sales and production typically peaking in the third month of each quarter in China, the company faced challenges from intensified local competition and weakened consumer sentiment. While the PCA has not yet released detailed data on Tesla's March shipments from its Shanghai factory, figures for the first 2 months of the year indicate a decline in market share from 7.9% to around 6.6% compared to the same period last year. This downward trend has contributed to Tesla's shares dropping, with a 1.2% decline before regular trading on Wednesday, following a 4.9% decrease the previous day. Tesla's struggle to compete in China is exacerbated by its limited vehicle lineup, consisting mainly of the Model 3 sedan and Model Y SUV, both of which were introduced before 2020 with minimal updates since. In contrast, competitors like BYD, NIO, XPeng, and Li Auto, as well as tech giants like Huawei and Xiaomi, offer newer and more diversified vehicle options. To counter Tesla's price competition, Chinese automakers have joined the price war initiated by Tesla, marking down their models and further intensifying competition. This trend reflects the broader slowdown in China's EV market growth, projected to increase by 25% to 11 million units this year, a notable decline from previous years. Despite challenges, Tesla delivered an estimated 89,064 vehicles in China in March, a slight increase from February but broadly consistent with March 2023 figures. However, total passenger vehicle sales in China increased by 7% in March, with plug-in hybrid and battery electric car sales rising by 28%, driven by companies like BYD. Globally, Tesla delivered 386,810 vehicles in the first quarter of the year, missing estimates by the largest margin in 7 years, signaling significant challenges for Elon Musk and Tesla in navigating current market conditions.
Check out our affiliated YouTube channel, Canary Comments, dedicated to insightful news analysis and thought-provoking opinions. Delve into the latest headlines with our team of expert commentators, who offer unique perspectives on current events from around the world. Join the conversation, stay informed, and broaden your understanding of the news landscape. Check out the link in the description below.
Tesla Motors is poised to explore potential locations in India this month for a proposed electric car manufacturing plant valued at $2 billion to $3 billion, as per sources familiar with the company's plans. This move towards establishing a manufacturing presence in India follows the recent reduction in tariffs on imported electric vehicles by the New Delhi government, provided companies commit to local production within 3 years. Sources reveal that Tesla intends to dispatch a team from the United States by late April to evaluate potential plant sites, with a focus on states boasting existing automotive hubs such as Maharashtra, Gujarat, and Tamil Nadu. While some speculation includes potential sites in Haryana state, near New Delhi, attention primarily centers on the aforementioned states due to their access to ports, facilitating exports. Although the individuals disclosing this information opted to remain anonymous, Tesla has not issued any official comment on these developments. A confirmed investment from Tesla would be a significant endorsement for Prime Minister Narendra Modi's administration, especially as India gears up for general elections. Modi has actively courted Tesla's involvement in India, citing substantial government subsidies aimed at bolstering manufacturing, particularly in critical sectors like EVs. Tesla has expressed interest in manufacturing a smaller, more affordable car at the proposed Indian facility, priced below $30,000, which could serve both the domestic market and facilitate exports to various regions. While the specifics of Tesla's Model 2 remain undisclosed, the company is eyeing late next year for its release. This potential investment signals a major boost for India's economy, with estimates suggesting a $2 billion to $3 billion initial investment and additional investments from suppliers, positioning it as one of the largest foreign investments in India. Tesla envisions the factory ramping up to produce up to 500,000 cars annually at full capacity, with potential plans for a battery plant modeled after its GigaFactory concept. India's EV sector has lagged behind China's, but initiatives such as this aim to bridge the gap, with other players like BYD and VinFast also eyeing Indian manufacturing facilities. As India formalizes its EV tariff reduction scheme, inviting applications by the end of the month, the stage is set for significant developments in the country's automotive landscape. Before we continue, please remember to smash the like button and subscribe to our channel. In other tech news, Microsoft and OpenAI are reportedly in discussions regarding a groundbreaking project dubbed Stargate, with plans for Microsoft to invest a staggering $100 billion in constructing a colossal supercomputing cluster to support OpenAI's upcoming advanced AI models. The revelation, reported by The Information, sheds light on Microsoft's ambitious venture into the realm of artificial intelligence. This investment dwarfs Microsoft's previous spending on infrastructure for OpenAI's GPT-4 model, which is estimated to have cost several $100 million to build. OpenAI CEO, Sam Altman, has also disclosed that training GPT-4 exceeded $100 million in expenses. Moreover, OpenAI is already underway with training a successor model, likely named GPT-5, utilizing one of Microsoft's existing data centers. Microsoft's recent establishment of a $1 billion data center in Wisconsin further hints at its commitment to housing the necessary infrastructure for training OpenAI's forthcoming models, expected to debut around 2025 or 2026. The potential price tag for the Stargate project in Wisconsin could soar to $10 billion, particularly factoring in the specialized NVIDIA chips essential for AI applications. This venture marks a significant departure from Microsoft's existing data center investments, with Stargate potentially costing 10 to 100 times more than its current facilities. While the scale of the investment is unprecedented, skeptics view it as a risky gambit, likening it to pouring funds into self-driving cars, a sector that has yet to yield substantial returns. Critics question whether a single AI model, even as advanced as OpenAI's, can justify such an exorbitant investment, especially if true artificial general intelligence remains elusive within the foreseeable future. The partnership between Microsoft and OpenAI carries inherent complexities, particularly regarding the delineation between commercialized AI technology and AGI. Microsoft's investment hinges on the assurance that OpenAI's models remain below the threshold of AGI, as the company's rights to commercialize such technology would be forfeited if AGI were achieved. Project Stargate signifies not only a monumental financial undertaking, but also raises pertinent questions about the future trajectory of AI policy and corporate strategies. Drawing parallels to historical moments like the Strategic Defense Initiative, Stargate embodies audacious ambition coupled with eye-watering costs, potentially reshaping the landscape of AI development and geopolitics. As Microsoft embarks on this unprecedented venture, it prompts reflection on the broader implications for global AI innovation and competition, with potential ramifications for international dynamics between tech giants and geopolitical powers. Moving on to the realm of automotive sales, the United States witnessed a nearly 5% surge in new vehicle purchases during the period from January to March, defying expectations amid soaring interest rates. However, the growth trajectory of electric vehicle sales showed signs of deceleration in the first quarter, attributed to concerns among mainstream consumers regarding limited driving range and inadequate charging infrastructure. Major automakers, unveiling their U.S. sales figures on Tuesday, collectively moved nearly 3.8 million vehicles in the first quarter compared to the same period last year, reflecting an annualized sales rate of 15.4 million units. Despite dealer inventories inching closer to pre-pandemic levels, automakers grappled with the necessity to slash prices to stimulate demand. J.D. Power, an American data analytics, software, and consumer intelligence company, noted a notable decline in average sales prices for March, plummeting by 3.6% year-over-year to $44,186, marking the steepest recorded drop for the month of March. Automakers bolstered discounts, with incentives surging by two-thirds compared to the previous year, reaching approximately $2,800, which included an uptick in lease offers. J.D. Power projected leases to constitute nearly a quarter of retail sales in March, up from 19.6% in the corresponding period last year. However, the EV segment witnessed tepid growth, expanding by a mere 2.7% to surpass 268,000 units during the quarter, significantly lower than the robust 47% surge observed in the previous year. This deceleration, primarily led by Tesla, underscores automakers' apprehensions about the pace of EV adoption among mainstream consumers. The EV market share in the U.S. dwindled to 7.1% in the first quarter, signaling a shift from early adopters and environmentally conscious consumers to a more skeptical demographic concerned about practical issues like charging infrastructure and battery longevity. According to industry experts like Ivan Drury, director of insights at Edmunds, prevailing concerns about charging infrastructure, battery life, and insurance costs are impeding broader acceptance of EVs among mainstream buyers. Jonathan Smoke, chief economist at Cox Automotive, warned of a potential downturn in spring sales momentum, fueled by consumer expectations of an impending interest rate cut by the Federal Reserve later in the year. Drury highlighted that more affordable vehicle options are gaining traction, with sales of large and expensive SUVs witnessing declines as consumers tighten their purse strings. Despite varying performance across automakers, many reported robust year-over-year sales increases, with notable exceptions including General Motors, Stellantis, Kia, and Tesla. General Motors sales dipped by 1.5%, while Stellantis experienced a nearly 10% decline, alongside Kia's 2.5% decrease. On the contrary, Toyota boasted a substantial 20% sales surge, fueled in part by a 36% increase in hybrid and electric vehicle sales. Other automakers such as Honda, Nissan, and Subaru also posted healthy sales gains, albeit at varying rates. Tesla, however, faced challenges with a global sales decline of nearly 9%, attributed to factory modifications and logistical setbacks. That is all the time we have for today. Tune in again tomorrow for the latest news update. Remember to like and share our videos. Also, please remember to subscribe to our channel. This will allow our videos to reach a wider audience. Thank you for watching.